Hey traders, Raghee here, and in this recap video, we're going to cover the S&P. Now, on a day like today, when we've got the FOMC in play, I will tell you, I'm not as interested in being as active. There are plenty of trading days in the month, and this isn't one that I necessarily feel is one of those must-trade kinds of days. In fact, a lot of traders think if there's a major event, there's going to be a lot of volatility, and certainly in that volatility, there has to be a profitable trade. Well, the way I look at it is there could be a lot of pain. There could be mistakes that are much bigger because of the volatility. So I'm going to come at a day like today from a risk management standpoint where the market better darn well give me a perfect looking entry at a more conservative level before I'm really all that interested. So I'm going to give you a trade right now. And that is what I want to do with the S&P. It's a low-risk trade. It's a really good example of a more conservative zone. And really the lesson here, as well as the trade idea, is this. The zone that I want to buy into makes sense because the trend that we've seen is generally up. The zone is created by the 34 EMA on the high, which is this green line, to the 34 EMA on the low, which is this red line. And inside this entire zone is the buy opportunity. But let's remember something. On the upper end of the zone, I mean, sure, that could get hit. We could bounce higher from there. But your risk reward is basically this area. That's your reward, all this in here. And then this is your risk from this area down to this area. Okay, that's your risk. So reward, risk. All right, it's about 1-to-1, and I can live with that. But we are seeing a lot more volatility. I am seeing a lot of the studies that we use, like the price movement ranges, tell me we could get down to this area. Well, if 27.75 is a level that's not out of reach, I could wait for this level to get hit and then go higher. Now you might say, well, Raghee, why not always wait for more conservative levels? That's true. But what's the downside to this lower level? The downside is we may never get there. The market bounces anyways, and then we miss the entire trade. So I like to scale in. But what's the idea here? I want to buy a pullback. I'd like to take advantage of 27.75. We'll see if that actually transpires. In the premium video, I'm going to show you a number of different strategies that I would use in this, depending upon what happens in the next few candles. The kind of candles that print, how much volatility with which they print would dictate if I could even consider perhaps an option strategy here. And then how long we spend in this area could also present other opportunities, not just on this 240-minute time frame, but also on other time frames. And we might have more than one entry opportunity, and we could manage risk across different shorter time frames. So we'll do a deep dive in this in the premium video. In the meanwhile, I am looking for a buy opportunity in the S&P going forward after it looks like this market put on a little bit of a tantrum with the notion that the FOMC is okay with a 4-rate hike kind of year. We'll take a look at the dollar, the euro, the yen, as well as bonds in the premium video. Talk to you there.